Greek crisis. For an instant audit on this, Adam Connors is Director of Corporate Finance for CK Cooper in Irvine, California. Adam, nice to see you this morning.
Great to see you, Jenna.
Well, Adam, we don't have a dollar amount. We really don't even have details on the strategy, this type of bailout strategy from the EU we've been hearing so much about. Do you think the markets are going to demand more than that?
You know, at this point, I don't think so. I think what we're doing is we're seeing that the countries are expressing that they are going to backstop Greece in some form or fashion, though, of course, they are using that stalling tactic, as I think you alluded to earlier. And so what we're seeing is that we're seeing the countries starting to posture themselves in order to make good politically, because we're seeing on both sides of the countries, both the Greeks are they're up in public arms. Germany's folks, I mean, reports came out today that over 50% of the people say if it keeps affecting the euro and the strength, that they would rather jettison Greece instead of help them out. So both sides are seeing a lot of political opposition.
You know,
so it's a tricky situation.
It's interesting that you bring up that kind of, well, back and forth. The Gartman letter, written by Dennis Gartman this morning, mentioned this, basically saying that the EU is now fighting for its very survival. Do you agree or disagree with that?
I think so. You know, the EU is new. I mean, it's been around since the 90s, and so what we're seeing is that they're testing some adverse situations that they're facing, and so in order for them to get through this, they're going to have to make some strong, hardline decisions. What they are playing hardball with Greece, which I do like to see, you know, forcing them to cut their debt to GDP ratio down to 8.7 from 12.7 as of current. That's a pretty tall order. And it's going to be hard for the politicians of Greece to convey that to their country members, but a tougher sell for Germany to do it to their own folks as well, including France.
Well, let's talk a little bit about currency then. As we mentioned, we're seeing you know, the dollar trade higher, the euro obviously trade lower. We've heard the term on Wall Street, you can buy on weakness. Is there any opportunity here as the currencies move back and forth?
In my opinion, I'd stay away from the euro at this point. The different countries and all the Portugal, Spain, and Italy, some of the others that are heavily determined, is that there could be some overhang there, and so I would stay a little bit away from the euro at this point. And with the dollar's certainty or uncertainty, I think it's just reflected about the weakness of the euro. And you can actually see that because, as you mentioned today, gold is up a couple points. And so folks are flocking more to gold because of, here's another rather supposed strong currency showing some weakness.
Yeah, up about $26 at this time, gold is. All right, Adam, thank you very much. Appreciate it. Adam Connors for us out in California. In the meantime, Adam Connors, the Director of Corporate Finance from CK Cooper, back with us this morning. Adam, what do you make of this? This maybe a potential movement in the discount rate, not the federal fund rate. What are the market implications of a potential move like that?
You know, it's good. It's putting the market on training wheels, or at least from a monetary standpoint. I mean, here's a great way for us to kind of increase a critical rate at the same time while not affecting the Fed funds rate, which everyone is really watching. And so I think this is a great move by Bernanke and some of the other folks at the Fed to you know, try to get us used to the idea of raising rates and taking the training wheels off and see what this economy has, if there's any foundation to it.
So how do you think the markets would react if that call was made? Would we see an instant reaction in the market one way or the other?
We would see an instant reaction. However, I think because it's not the Fed funds rate, it's the discount window, that the reaction would be rather normalized, and we'd be able to see, you know, I think the market would dismiss it after the initial volatility of it.
Talk to us a little bit about what you just said, putting some of these rates or maybe the markets a bit on training wheels. You made that reference. Vince Reinhart was talking to Peter Barnes about this. He's a former Fed official down in Washington, and he was saying that touching the discount rate is really about market function rather than a statement about the general economy. Can you explain that a little bit more?
Yeah, when he says market function, basically he's talking about banks have their own reserve limits that they need, and so what the discount window does is it allows the banks to have to meet those reserve requirements, and so it's a matter more of function of the banks rather than the actual translation into the actual rates that's passed on into the consumers. And the consumers are the ones that really affect on the Fed funds rate. And so what they're talking about is that it's more of a function of a formula rather than a function of actual subjective view on the economy's strengthness or not.
How do you think the banks would react, either their stock reaction to this or even just internally? How do you think the banks themselves would feel about this move?
Well, you know, the dependency upon the Fed at this point, or the deposits the depository, has gone down, and so I think it's a I think it's the right time to do it, quite frankly. I don't think after the short-term volatility that you may see, or maybe some folks, because it is a subjective sign that the Fed's trying to take the training wheels off, I think it's going to be positive, and I think it's going to get everyone's mindset going to the fact that it's time to see if the economy has anything to it. And yeah, I'm sure they're going to do it in rather nominal steps, so it's not going to be a huge hike all of a sudden.
When do you think that call is going to be made?
I'd probably say soon. My guess is he's already prepped the markets to do it before the 16th, before the next time they meet. And so I wouldn't be too surprised if they actually did it sooner than the next time they meet.
He's dropping a little hint, is what you're saying. Bernanke, hinting. Hinting
I'm not dropping anything.
Oh, all right, Adam. Adam, thank you very much. Back to Adam in a little bit to talk about the earnings day ahead, Ashley. Cadbury. For most of Cadbury's shareholders, 90% agree to sell their shares to Kraft. That's enough for Kraft to force the rest of them to sell as well. In the meantime, Adam Connors of CK Cooper back with us again this morning. Adam, you said you're not going to drop anything, but we need you to drop a little knowledge on some of these companies that are reporting today. First of all, Kraft, big company, consumer items. What are you expecting from Kraft today? What are you going to be watching for?
I'm going to be looking for, I expect things to be in line. I mean, obviously a lot of focus is going to be on the Cadbury merger. They're going to be, folks are going to be looking for any type of indication or any type of more synergies that management's going to divulge on an earnings call. And so that's what we're going to be listening for. We think it's a good deal. I mean, it's a great company. It's got some good prospects moving forward. And they're obviously going to have a diversified offering in the future. So I think this is a great company.
Is it a buy here?
I think so. Yeah, I think so. I mean, I think it's had enough pressure at this point. It's had enough speculation to not to the point where I'm a little scared of it. I think right now at the levels that it's at, it's definitely something to be looking at.
Yeah, maybe just like Oreos. I mean, we had a big conversation yesterday about mac and cheese with Kraft. Adam, just completely switching gears here to Merck. Merck also obviously a very big name. A sector that we've been watching closely, but hasn't really been a complete market mover as of late, as maybe it was 3 years ago, for example. What do you think about Merck?
You know, Merck, with the recent roll-ups that it's done and the acquisitions, it's the second largest drug maker. And you know, I think with the situation that is in, this is a good time to maybe start looking a hard look at the company because you know, they've kind of curbed their pipeline issues as far as their drugs falling off. And they also have some pretty decent synergies in order to cut some costs for some of the overhead of the roll-up of the companies that they've acquired. So I think this is a good company at this point. You know, might want to definitely take a look at it. I mean, we're taking a hard look at this company amongst others.
But not pulling the trigger yet. So you're looking at when you maybe potentially buying on weakness here?
Potentially, yeah.
Okay.
I don't want to give away everything, Jenna.
Well,
Jeez.
Come on, Adam. I mean, that's why you're here. Give it all. Abercrombie.
Ashley said I was sleeping, though.
Well,
yeah,
we didn't say that you were sleeping. We know that you're a little under the weather, and it's nearly 3 o'clock in the morning in California, so we really appreciate it. Finish up here with Abercrombie, though. This is a big teen retailer. Good insight into that type of consumer. What do you think of Abercrombie and also just retail for this segment, for this age group overall?
So I think with Abercrombie, because of the actual tier that it goes after the consumer, it's that mid to upper tier as far as cost goes. I don't think that they'll see the same surprise as we saw with a lot of the retailers that were on maybe on the lower end. We did see the consumer pick up by year end, and we had a little bit of surprise for sales overall. I just don't know if Abercrombie is going to be the ones that are going to benefit that fully, and so I would expect in line maybe a surprise towards the lower side at this point.
So when you're choosing between companies that have a big vulnerability to the consumer, you prefer a company like Kraft over a straight retail play like Abercrombie, for example?
Well, sure, absolutely. I mean, Kraft has their offering is that consumer staples. I mean, it's things that your Kraft macaroni and cheese. You know, if everything goes to blank in a handbasket, you're going to be just fine. You're still eating your Kraft macaroni and cheese. However, am I going to go pick up my new cargo shorts at Abercrombie? I mean, I might vow to go to Target to pick those up instead. So.
Really? You learn something about Adam every time he's here. You know, I was naming the...
Hypothetically.
Hypothetically speaking, of course. You know,
Yes.
I was giving you the name of your company earlier. I thought just Adam Cooper rather than... I think, just says the big boss, Adam. That's how I see you.
I understand. I appreciate it, Jenna.
All right, Adam Connors
Your
is with us.
flattery never goes unedited. Thank you very much.
I just wanted to make sure that it was clear about how I made that type of mistake. Adam, thank you. I know you're going to be with us for the rest of the online show. Adam is going to be with us